What's up, guys? It's your boy Ray Sid, and I'm back with how to invest in 2020. So, even beyond how to invest in 2020 is, should we even be investing right now? Is this a good time to invest? Can I make some money right now? What's really going on? So, if you guys saw my last video, I did make a lot with Tesla over the last month or so. Investing in middle of March, I was able to make a return of about $400 per share, a little bit less than that. I bought in exactly at about 360, and I'm not going to sell. I'm holding right now at about $700 a share. So, first and foremost, should you invest right now? The answer is yes. You should always invest. You don't want to time the market. There's no such thing as timing the market. And most people, what they want to do is just keep taking a little bit of money and putting it into the market. And over a course of 5 years, 10 years, whatever the case is, you'll realize that you did make a return on your money. If you're watching the market every day and you're not a day trader, you're making the wrong move. We're just trying to keep putting money in, and we're going to average out higher over the course of, again, 3 to 5 years, or for some of us even longer than that. For me personally, I'm trying to save for retirement. I'm also trying to save for, my family. So one of the biggest things that I want you guys to do is go ahead and download either Robinhood or Webull. I don't care if you don't put $1 into either account. I want you to download either of those apps so that you can start watching the stocks and watching what the stocks are doing. So right now we're kind of realizing there's a bunch of articles out. The Dow's up, the Dow's down, stocks are great, stocks are horrible. We're gonna find out, where can I make some hard-earned cash with stocks. So right now we're looking for stocks that are trading near their 52-week low. The 52-week low is showing about where the low point is for the stock over the last year. Now that gives you an idea of where the bottom is. Now the bottom could be below that. The 52-week low might just be the start, and things might get way worse than that. But according to the 52-week low, that should be about where the bottom is. So if I'm buying a stock near the 52-week high or the 52-week low, I really want to know where I'm buying the stock there. So that's going to help us know, again, is it time to invest? For me, there's been a couple of good stocks that I've bought recently, and I want to give a few more videos after this on individual stocks and which ones you should buy. But for now, we're just going to start with looking at what stocks we like. We're going to get onto Robinhood. We're going to go to the search feature. After we go to search, we're going to go to top 100 stocks. See if we know any of those companies. See what stocks we might like, which stocks might make sense for us to buy, which stocks look interesting to us, and that's where we're going to start. From there, we're going to check the numbers. We're going to check the 52-week high, the 52-week low, and we're going to be sure that this stock is not too close to the 52-week high to where we may be buying in at a place where we're going to lose money. Again, our strategy isn't to time the market, but we want to make sure that we're buying at a time that's not crazy. Buying Amazon right now at the highest point it's ever been at is less likely to produce returns than buying a stock that's at its middle or is on its way up. So the next thing we're going to do is we're going to find some stocks that we like. So when we're on the 100 most popular stocks, we're just going to look for any stocks that maybe we know the company, maybe we know someone that works there, maybe we know anything about those stocks. Those are going to be the stocks that we're going to kind of use as our first leads and stocks that we might be interested in investing in. So check those stocks first. Now, if you've already invested, I'd like to talk about something called dollar cost averaging. I'll do a video on this later on. But what we're going to do is, if the stock market does go down after we buy, no problem at all. All we're going to do is buy in more, and we'll lower our average cost of each stock. So let's say I bought Tesla at $700 a share. Next thing I know, it goes down to $400 a share. What I want to do is always have liquid cash so that I'm able to then buy again at 400. And that'll average those two numbers, dollar cost average, and my actual equity in the stock will be the average of those two numbers. So anytime a stock dips, consider it buying that stock on discount. It's like buying it on a sale. You should see the big sale sign and you say, wow, this thing that I thought was a great idea at $700 a share is at $400 a share now. It makes even more sense for me to buy it. So anytime a stock dips that you already looked at it, you looked at the 52-week low, you looked at the 52-week high, you like the stock, it's been trading good for you. Now from there, if it dips on you, you're going to buy it at a discount and lower your average cost that you paid. So again, right now, I do think it is a good time for us to always invest. Anytime it's high, low, whatever the case is, always set aside some of your income. But be careful. Make sure that when you're investing money that is not going to be something you immediately need. Again, 3 to 5 years is what I say. I think a lot of people out there would say even greater time than that. So anytime we're investing, yes, it's a good idea. Yes, right now is a good time. We're seeing stocks at very, very low lows, and they're poised to jump back up after the illness. So I think it's a great time. I think there's a lot of money to be made, but I think start small. I'm going to have a video coming soon, what to do with your first $100 and how to invest that $100 to get started and start watching the stock market and start deciding where you want to put the rest of your money.